Hi students, welcome. I am Dr. Majini Jasballa, Assistant Professor, Wales Institute of Science, Technology and Advanced Studies. In this video, I am going to explain about stock and debtors method from Financial Accounting 2. We can see the introduction, types of transaction and journal entries and one exercise from this video. Okay, week 2, lesson 1. First, we can see the introduction about stock and debtors method. Profit or loss of a branch can be found out by preparing the branch account, which has been discussed earlier because previous lectures also they have discussed. But there is another method for the same purpose. This method is known as stock and debtors method. If it is desired to exercise a more detailed control over the working of a branch, the accounts of the branch are maintained under what is described as the stock and debtors method. Under this method, the head office keeps separate accounts relating to various types of transactions at the branch instead of one branch account. The following accounts are kept in the head office books relating to a branch under this method. First, we can see the accounts. What are the accounts they are maintaining? The first, branch stock account, branch debtors account, branch expenses account, branch adjustment account, branch profit and loss account, goods sent to the branch account. First, we can see the brief explanation about this branch stock account. This account deals with all the goods received, returned and sold by the branch. The account helps the head office in maintaining the effective control over the branch stock. It is debited with the opening stock, goods sent to branch, goods returned by debtors and surplus in stock if any. It is credited with cash sales, credit sales, goods spoiled and goods lost like loss in weights, pilferage, loss in transit, good return to head office by branch, closing stock. Then we can see the branch debtors account. This account is prepared to record all the transactions relating to branch debtors and ascertain either the closing balance of debtors or credit sales. Then branch expenses account. This account is prepared to disclose branch expenses, losses of account of discount on debtors, allowances, bad debts and other charges which was made by them incurred at the branches. And all the expenses incurred by the branch are recorded in the debit side of this account and the balance of this account is transferred to the branch profit and loss account. Then we can see the branch adjustment account. When the goods are sent to branch at cost price, this account need not be prepared. Instead, when the goods are supplied to branch at invoice price, it must be prepared to ascertain the gross profit made by the branch. This account is debited with the closing stock reserve, profit element of stock shortage, defectives, loss on transit and pilferage. Then value of loss in weight. It is credited with stock reserve on the opening stock, loading on goods sent to branch, the profit element of stock surplus. Then we can see the branch profit and loss account. The branch profit and loss account is prepared to ascertain the net profit made by the branch. It is debited with balance of branch expenses account, then cost of goods lost due to shortage or any defectives or any loss in transit and pilferage. It is credited with the gross profit shown in branch adjustment account, the cost of surplus if any revealed by the branch stock account, then the amount recoverable from insurance company if in case any losses in the stock. Then we can see the goods sent to branch account. This account is prepared to find out the net value of goods sent to the branch because the companies will send to the stock to the branch, right? Goods sent to branch and goods returned by the branch and loading included in the if any other stocks are recorded in this account. Balance of this account is transferred to either purchase account or trading account depending on whether the firm is trading concern or a manufacturing concern respectively based on the company. Then we can see the journal entries. Some of the journal entries I have given here for the various types of transaction of the students easily understanding. The first one is when goods are sent to branch. What is the journal entry? Branch stock account data to goods sent to branch. Okay. In case any reverse entry, that is the return is there now, we will write the reverse entry. Okay. Then next journal is when sales are made by the branch. In case cash sales, cash account data to branch stock account. This is the journal entry. Some of the case situation we are making the credit sales. In case credit sales is there now, branch debtors account data to branch stock account. This is the journal entry. In case any return is there now, we will reverse entry will be passed for the customers. Okay. Then the third one is when cash is received from debtors. When we are making the credit sales, definitely the customers will pay the cash, right? So when we are receiving the cash, what is the journal entry? Cash account data to branch debtors. Okay. The companies are allowing the discount or allowances and the bad debts are also with them. In case any discount allowed, allowances and bad debts are there now, what is the journal entry? Branch expenses account data to branch debtors account. Then for branch expenses paid in cash, branch expenses account data to cash or bank. In case they will make the branch expenses in the form of cash. Okay. For closing branch expenses account, in case any other closing branch expenses is there now, what is the journal entry? Branch profit and loss account data to branch expenses account. I have given one exercise for easy understanding of the students. Just I wanted to read the question here. The Bombay traders invoiced goods to its Delhi branch at cost. Head office paid all the branch expenses from its bank account except the petty cash expenses which were met by the branch. All the cash collected by the branch was banked on the same day to the credit of the head office. The following is a summary of the transaction entered into the branch during the year ended 31st December 2011. I have given 4 columns. In the debit side, 2 columns you should draw it. In the right side also, you should draw 2 columns. There are 4 columns. In the debit side, particulars column and the amount column. In the right side also the particulars column and the amount column. Okay. Now we can see the debit side. What are the items they have given? Balance as on 1/1/2011. Stock 7,000. Debtors 12,600. Petty cash 200. Goods sent from HO. HO means head office. Okay. 26,000. Then goods returned to head office 1,000. Cash sales 17,500, credit sales 28,400, allowances to customers 200, discount to customers 1,400. Come to the credit side, bad debts 600, goods returned by customers 500, salaries and wages 6,200, rent and rates 1,200, sundry expenses 800, then cash received from sundry debtors. How much? 28,500. Then we can see the closing balances. Stock 6,500, debtors 9,800, petty cash 100. Prepare branch stock account, branch debtors account, branch expenses account, branch trading and profit and loss account. Right? Now we can see the solution. First we can say how to prepare the branch stock account. Okay. 2011 is the accounting year, 1st January to 31st December. Okay. Jan 1 to opening stock, how much they have given in the question? 7,000. After that, they send to branch goods worth rupees 26,000. Okay. That also we will write it in the debit side. How much is the goods sent to branch? 26,000. Okay. Come to the credit side. The sales value they have given. Cash sales 17,500. Then credit sales 28,400. Okay. Return also they have mentioned in the question 500. The sales return you will subtract from this total sales value. Credit sales value 28,400 minus 500. You will get 27,900. Cash sales 17,500 plus credit sales after the return 27,900. You add both amount 17,500, 27,900. You will get 45,400. Okay. Then goods return. Goods return, how much is there? 1,000, right? Goods sent to branch, that is return value. Okay. Then in the debit side, branch profit and loss account 19,900. Okay, that is the stock value. You will calculate it 19,900. You should put total. In the debit side 52,900. We will get the closing stock value 6,500. 52,900 minus 45,400, then minus 1,000. You will get the balance 6,500. Okay, that is the stock value. Then you will brought down that stock 2012, the next year. As opening, you will brought down it, that value, to balance BD 6,500. Okay. Then we can calculate the branch debtors account. 2011 January 1 to balance BD 12,600. We can see this amount from the question, 12,600. Then what are the items they have given in the question? Cash 28,500, sales return 500, allowances 200, discount 1,400, bad debts 600. Just to total it, the closing balance 9,800, right? When you put the total, the debit side 41,000 minus the credit side value, the by balance CD 9,800. Just you brought down that value for the next year, 2012 January 1 to balance BD 9,800. Then we can see the branch expenses account. In the debit side, you put 3 columns, and in the credit side also 3 columns. Date column, particulars, amount. In the credit side also date, particulars, and the amount. Okay. Now we can see the expenses. What are the expenses are there? Salaries and wages 6,200. They have given in the question. Then rent and rates 1,200. Sundry expenses 800. Then petty cash expenses, they have spent only 100 rupees. Okay. Then allowances to customers, they have given 200. Then discount 1,400. Bad debts 600. Okay. This amount we will transfer to the profit and loss account. Okay. Total amount 6,200 plus 1,200 plus 800 plus petty cash expenses 100. Allowances 200. Discount amount 1,400 plus bad debts 600. You will get 10,500. This 10,500 we are going to transfer to the branch profit and loss account. Okay. You just equalize both sides. 10,500, 10,500. The credit side we will write it by branch profit and loss account 10,500. Next we can see the branch trading and profit and loss account. Here also debit side we can see the particulars column, then the amount column. The credit side, particulars column and the amount column. Okay. We can see to stock 7,000. Then goods sent from HO, that means the head office 26,000. Then returns to head office. Returns which was mentioned in the question 1,000 rupees. We will subtract this 1,000 from this 26,000. 26,000 minus return, you will get 25,000. Okay, you will write it in the outer column. Then in the credit side, sales, cash sales 17,500, credit sales 28,400 minus return. Okay, return how much? 500 is the return. Credit sales 28,400 minus 500. You will get 27,900. You will write it in the outer column. Just you put the total cash and credit. How much? 45,400. You will get it. You will write it in the outer column. Then closing stock. Already we have find it. 6,500. We will write it in the closing stock value. 6,500. Just you put the total. You will get the gross profit 19,900. 51,900 is the total amount minus the stock, opening stock 7,000, then goods sent from head office and the return also. You will get 25,000, right? You will subtract that 25,000. When you are subtracting these values, you will get the gross profit 19,900. Then we can see the profit and loss account. Just to brought down the gross profit which was in the trading account 19,900. Just to brought down this gross profit 19,900, and we can write all the expenses in the debit side. Salaries and wages 6,200, rent and rates 1,200, sundry expenses 800, petty cash expenses 100, allowances to customers 200, discount 1,400, bad debts 600. Okay, just you put total it all these values and you subtract this amount with this gross profit value. Gross profit how much? 19,900. After that you should subtract all these values, the debit side values. When you are subtracting these expenses, you will get the net profit 9,400. Okay, equalize both sides. The credit side value 19,900. After subtracting all these expenses, you will get the net profit 9,400. Thank you.